Get some decent gains, but once again, well short of what we saw on Wall Street.
It was good to see a good day on the Australian market, and we did see gains pretty much across the board with a gain of 0.9%. But as you mentioned, James, underperforming the US, the S&P 500 index was up by 1.3% overnight. Of course, the gains are on the back of Ben Bernanke's comments, and that talk really helped the S&P 500 index closing at the highest level that we've seen in 4 years. The Australian market, while we did rise higher, I guess we didn't see the same type of gains as we've seen in the US. And one of the things that may be keeping back our market is the number of capital raisings that we're seeing. Just this week, we've seen capital raisings, a $450 million one being announced by the Bank of Queensland, a $400 million one by Guns, and then of course today we've heard from Beach Petroleum, so that's $340 million there. So all up, in the last couple of sessions, we've heard about $1.2 billion worth of capital raisings coming through from companies listed on the ASX. But if we have a look at market performance today, it was a good one. In fact, if we have a look at the top 20 blue chips on our market, only one managed a loss, and that was QBE Insurance, down by 0.6%. Not surprising given its exposure to US interest rates and Ben Bernanke's comments overnight. But otherwise, we did see financials doing very well. Macquarie was up by 3.4%. We saw Suncorp gaining 1.9%, and we also saw AMP up by 1.6%. So those financial stocks outperforming in terms of the blue chips, and all sectors trading higher with the one exception of the utility space. We did manage to close above 4,300 points today, and if we have a look at the market over the last 30 days, this is what it looks like. I've just drawn a line up at that 4,300 point mark, and you can see that the other times we've managed to stuck our nose above that mark, we've come back down again. So the market will be hoping that we will be able to beat the 4,320 point mark, which is the highest level that we've seen in the last 30 days. So once again, sticking our nose above that mark, but really we want to see a clean break of this 4,300 point psychological level.
Yeah, Julia, just on that level, Jeremy and I, just before we came on air, we're talking about the fact that we did manage to finish above it, but not with an awful lot of conviction. Do we need to see a bigger break above it before we start thinking of, keeping it in the rearview mirror?
Well, you can see just from this chart behind me, in the last 30 days, we've actually seen that 4,300 level being broken 5 times, and then we've come back down below it. So it does seem to be a key level of resistance. The market just doesn't seem to be able to confidently get past this point. So looking for a catalyst, hopefully the US being a positive guide to our market will be a key catalyst. But looking at technical indicators, and the US technicals are looking very good at the moment. We saw the standard at the S&P 500 index closing at a 4-year high. And if we have a look at some of the Recognia signals, technical signals that Bell Direct has, there's 11 bullish ones on the S&P 500 and only 1 bearish. The Australian market's looking fairly good. We've got 10 bullish signals, but we've still got 3 bearish signals. So I guess in terms of the Aussie market, short term, looking quite bullish, but not to the same extent that the US is.
One of the driving factor that filtered through all sort of markets, Ben Bernanke's comments, Julia, overnight, really fueling the risk trade. Is it something that can continue? Obviously, a lot of people taking out of his comments, and rightly so, I imagine, to a degree, that QE3 very much a possibility in his mind. Are we seeing a one-off boost in terms of overnight today for our markets, or do you think it is something that can continue to fuel risk-weighted assets?
Well, it certainly helped to fuel the US rally, whether it was being quantitative easing 1, QE1 or QE2, or talk of more accommodative policies in hopes of QE3. It's all been good news for the US market. And if I just bring up a longer term chart of the US market and just what the impact of quantitative easing has had on the US market, you can see QE1, we saw a huge rally back in 2009, 2010, and then of course towards the end of 2010, speculation about QE2. We actually got QE2, and you can see we saw a rise in the market at the end of QE2. We saw the market really giving back those gains. The US market still hoping for more quantitative easing, and that's helping the US market higher. And I guess that's a key difference between the Australian market and the US market. While there's a lot of liquidity in the US with the low interest rate setting and quantitative easing, here in Australia we still have relatively high interest rates, and that's a key difference for the performance in terms of the Aussie share market. Of course, our market also really getting its cues from China as well, and Australia is often seen by international investors as a safer way to invest into China or as a second derivative of China. And if you have a look at the Chinese market, a very different picture to the US market. Now, this is a 5-year chart of the US market. This is a 1-year chart of the Shanghai Composite, but you can see it's definitely not a bullish picture on the Shanghai Composite, the Chinese market, over the past 52 weeks. So the Australian market probably suffering a bit from that, but of course quantitative easing, liquidity, good news for the markets, but mostly for the US market, but hopefully some of it will be passed on to Australia as well.